We all want our books to be IRS proof. We want them to be, lesser in taxes. We want to do all of those things with our books, especially as small businesses, right? However, it's also really important to know your company's financial standing, and there's only a few ways in which you can do that. I'm going to walk you through a 5-step month-end close process that's going to keep your books accurate and, going to help you get an idea of where your company stands. So, first of all, let's start with reconciling your bank and your credit card. So a lot of people use QuickBooks, and I'm going to speak for QuickBooks because that seems to be the one that everyone uses, like I said. Um, you want to make sure that when you are in the transactions window, that you are including anything that matches your bank statement. Now, your bank statement is going to be what I call gospel. Uh, the reason why you don't just go off of your bank statement, though, is that your bank statement is showing you what your transactions look like, what the data looks like. However, putting them into a bookkeeping platform is going to show you what that data means. So in your transactions window, you're going to include whatever also shows up in your bank statement and exclude anything that doesn't. The reason why you might have to exclude anything is because sometimes things go bump in the night and some of the transactions will show up once, twice, 3 times. You're just going to exclude them. You also want to make sure that the way that QuickBooks categorizes them are correct. QuickBooks has been utilizing AI for a while now, and now they have a even more sophisticated AI that is still really wrong. They're going to make guesses based on what your transaction is or where it's from or what time of day as to what that reflects on your chart of accounts. So let's say, for example, you go to the grocery store. It's going to assume that you went to buy food. But let's say the reason you went to the grocery store was to buy office supplies. It's not going to know that. So you have to make sure that all of your categories are correct. Next, once you've included or accepted all of the transactions from that transactions window, you're going to go to the reconciliation window. Many people believe that by accepting the transactions on that transactions window, that means you're done, you've reconciled. No, you must go to your reconciliation window from here. In that reconciliation window, there's a drop down where you will choose the bank account or credit card account, whichever one it is that you're going to reconcile. There should be a beginning number and the ending numbers, the same one that's on your bank statement for whichever month it is that you're going to be reconciling for. Go into the reconciliation window, reconcile everything, meaning check mark everything that is in your bank statement as well. Anything that is left over that you can void or delete, go ahead and do that because anything that's left in that window is still going to be reflected on your profit and loss statement. So once you've done that, now you have a pretty accurate and up-to-date view of what your transactions, your profit and loss is going to look like. From here, you need to go to your AR window. This will be your accounts receivable. You need to make sure that your accounts receivable is up to date and correct. Are you getting paid? Are you not getting paid? What's going on? So you need to know if there are patterns in some of your clients and some of your customers that don't pay or do pay. The ones that pay you loyally every month this is another video, but you do want to reward them because they're loyal to you. You should be loyal to them as well. The ones that are not paying you on time, you need to remind them that they need to pay you because that's money left on the table and that's money that works towards your or against your cash flow analyses. From here, you go to your accounts payable. Your accounts payable are the bills that you owe. These are vendors that you have to pay. QuickBooks does have the option for you to utilize their accounts payable feature. You could also use bill.com or whatever else it is that you choose to use, but make sure that all of your bills are being paid on time. Also, This is how you avoid late fees or any other interest that you may incur. That's money going out the window that doesn't need to go out the window. So make sure you stay on top of that. Once you've done this, the last thing you need to do is to make sure that your payroll is being recorded correctly. A really cool feature on QuickBooks when you're doing your payroll, if you use QuickBooks as payroll, is that every payroll you run, before you click submit, it will show you whether or not your payroll has gone up or down according to your historical data, which is actually kind of cool. Because if you see that your payroll has jumped and it shouldn't have jumped, either you made a mistake or something else is going on. It also will tell you with an arrow up or down and the percentage of how much up or down or no change there has been per person that you run the payroll for, which again, I think is pretty cool. Because what if somebody went, 100% up? And you're like, wait, this person didn't work any different than they normally do. So what happened? It could be human error. It could be data error. Regardless, it's an error you need to look into. Once you've taken care of all of these, that is when you can run your profit and loss report and your balance sheet. The balance sheet to me is a whole other video. We're not going to get into it right now. However, this is where you're going to see the true data and what that means to your business's health. So I'll give you an example of a client that came to us with unreconciled accounts for the year, which is not unusual for us. We do tend to see people who haven't had their books done for the year, and that's okay. Problem is, they thought that they had quite a few $100,000 available to them because that's what the bank said. However, they didn't. There were a lot of vendors that had not been paid. A lot of that money, and it ended up being that they were upside down. So you need to make sure that you are staying on top of your reconciliations, stay on top of your reports. And of course, if you happen to find unused subscriptions, which is something that we also found for them, you could save a lot of money. We ended up saving this client $3,000 in unused subscriptions. That's considerable. So you have to stay on top of these things. I know it's annoying, but if you don't have the time, then you need to hire a bookkeeper. It's really important that you have someone checking in on the financial health of your business if you plan to stay in business for a while. And if you don't have the time, like I said, you could always reach out to us at info@versatileSolutions.com. Click that button that says follow, and also click that like button if you want to hear more.